welcome to the Trading Bell. I'm Maalika, Kazia, and today, once again, I have the opportunity to sit down with a managing director from a company that has joined the Ibuka Acceleration and Incubation Program. This time around, I'm talking to the managing director for Polygon Logistics Limited, which has been around for close to a decade now, and that is Ben Omolo. But before we get right into this conversation, take a look at his profile.
Ben Omolo is the founder and managing director of Polygon Logistics since 2010, with a top 100 SME position second award in the 7th year. Omolo has previously worked as the managing director at SkyTrain Limited with a workforce of up to 120 members and as operations manager and exports manager for Homegrown. He has also served as the operations officer and customer service at Air France.
Ben, thank you so much for making time for us and joining us on the Trading Bell today.
Thank you to Maalika.
All right, let's just begin by, you telling us a little bit about Polygon Logistics and what it is that you aim to do.
Polygon Logistics is a family business. As you mentioned earlier, it was started almost a decade ago. And how it came about to be was based on my historical background, working with Air France for 7 years, working for Homegrown for another 15 years, which was 22 years based at JKIA. I developed a liking in what I was doing when I was employed, just generally organizing, at the peak of my career, organizing freight logistics for Homegrown in terms of imports, exports. And I developed a very good experience, which culminated in myself running one of the sister companies of Homegrown called SkyTrain, which was a clearing and forwarding outfit, dealing in freight logistics, especially cargo charter flights to Europe. So with that, I developed a passion in logistics. So when the business was, when Homegrown was bought by Finlays and they asked me to step aside, I opted to go and start my own business based on what I knew best, which was logistics, and that's how Polygon Logistics came to be.
So you focus mainly on a lot of imports, exports, and the likes. How are you seeing the trajectory of the business having developed throughout the decade?
The trajectory of the business developing has been very, very tremendous. Reason being, we are good at what we are best at what we do generally, and the other main thing that we do is we do everything above board. And with the current scenario whereby the government is trying to streamline a lot of issues that we've had with contrabands and with people taking shortcuts in the clearing business, I think we're in the right place. And the next thing that we'll just see is tremendous growth based on the new developments that the government is implementing.
Okay, actually speaking about what the government is focusing on, just recently we had President Uhuru Kenyatta stress that, the containers that have been held at the depot need to be cleared in the next 3 weeks. So were you affected with the holding of the containers that had been going on, maybe even over 1,000 estimates have said?
For Polygon, we were not affected at all. What we've been affected with is occasionally some bureaucratic delays. But because we handle clients who are above board, who do things legitimately and straightforward, we've not had an issue with the containers being held, just slight delays.
Okay.
On the containers that the president had to intervene, we were not party to any of those. Yes.
So how do you see now that you've joined the Ibuka program, what are some of your plans going forward to expand and to grow even further?
I'll just give you a little bit of a background, the reason how we came into Ibuka. Sitting in my office, I was used to doing the day in, day out routine work. But as a managing director of the business, I need to focus on a lot of things that will take the business forward. So sitting on my desk, one day I thought that we need to have visibility and to have accountability by getting people coming in to invest in the business. So we started off with GEMS, which didn't work. And GEMS was the growth enterprise market segment. Which the Nairobi Stock Exchange decided to change the focus and came up with a Ibuka program, which to me is looks like it's going to be a game changer. And so far, whatever we're already doing on Ibuka with the NSE is coming out, and I can attest to that based on this interview that we are carrying out today. And Ibuka is going to come up with a lot of statutory requirements, with the standards, and Polygon is ready to get on board Ibuka so that the business can grow, and also for succession planning.
Amazing. So specifically, you were telling me a little bit earlier on that it's a family business.
Yes.
And one of the major things you aim to do through Ibuka is create more of a semblance in the organizational structure. So in that regard, what exactly are you planning to do?
My plan is as follows. Our business is heavily cash oriented. You have to get your cash flows right. So for Polygon to get their cash flows right, we need to have investors coming in, and investors will not come in a business that is totally close to the family, because it has got to be visible. It's got to be seen what they are doing, and that visibility will enable us to have investors coming in. We'll have to have the structures in place to make sure that we can generate more business by getting investors coming in, giving us the correct cash flows that we need to run the business.
Mm-hmm.
Yes.
Okay, and you know, when we talk about where you see Polygon in the next 2-3 years, even 5 years, what are some of your ambitions?
My ambitions are to see the business grow from being a top 100 SME to the top 100 has got another program that's called the Club 101. So Club 101 gets your revenues from 70 to 999 million to $1 billion.
Wow.
Yes.
So amazing, really great.
Yes.
And I'm sure this is going to spur you in the right direction, of course, with the program. Now, when it comes to having investors on board and things like that, do you yourself personally invest in companies listed on the NSE?
I've not had the opportunity to invest in companies listed in the NSE. Reason being, Polygon managed to get the financial backing from my initial savings, which I did with insurances and all. So I needed the revenues to keep the business running. And for me personally, to invest in the NSE was very difficult because I was using most of the money in putting Polygon into position. And as I mentioned earlier, the cash flows are very, very key in running the business. So what I'm looking at is, as soon as we'll get investors and those ideas which can come on the board, and we see what we can do with the funds.
Amazing. So, you know, you've set up your SME, you know, you're well on your way to even expanding it, growing it to great heights. And there are a lot of youth in the country who decide that they also want to get into business, they want to have their own, and they want to be their own boss. So I like to ask this of most of our Ibuka leaders who come on board for the Trading Bell, that, you know, if you had to give 3 key pieces of advice to the youth who want to have their own business, what would it be?
My pieces of advice, the first piece of advice will be experience. They need to go out there, get employed, they get the experience. Secondly, they will need a lot of patience. And thirdly, they will need generally discipline, but more so financial discipline.
So what do you think are some of the greatest sources of capital that they can find currently in this economy that we have?
The greatest source of capital will just be bank finances.
Okay, so you believe that's a good way to go for them?
That's a good way to go.
Okay, and finally, you know, just as we close up, any of your final thoughts on what's happening in terms of Ibuka and how your experience has been so far?
Ibuka generally is a fantastic idea. And during one of the interviews that I did with the staff of the NSE, I told them that I will be ready to run with them on Ibuka. I know it's a new program for them, and they will need a lot of support from the companies that have joined Ibuka to take it forward. Otherwise, they cannot do it alone. So I told them I'm ready. If they need me at 4 in the morning, if they need me at 11 in the night, I will be available to take Ibuka forward.
Amazing.
Yes.
All right, thank you so much for speaking to us today.
No problem.
Well, that was Ben Omolo, the Managing Director for Polygon Logistics Limited, talking all about joining the Ibuka program today on the Trading Bell. But now let's take a look at the markets.
time for market analysis, and of course this week we shall be hosting Elizabeth Wangeshi, who is the head of research at NIC. Thank you so much for joining us.
Thank you for hosting me.
So Elizabeth, looking at this week, we are seeing the NSE 20 closing off at 2,650 points.
Yes.
And of course, the 20 share index has been having a sort of a volatile, should I say, past few weeks.
Yes, the past 4 weeks.
So what's happening really? Is it a good indication or not?
Well, I would say it's a mixed reaction on both sides, because what we are seeing is foreign investors selling some of their stocks, some of their holdings, and also the locals are not also active in the market. So that means there's no much activity in terms of trading, and that's why we're seeing the index movement is quite small.
All right.
Yes.
And of course, Elizabeth, some of the biggest movers today we have is Safaricom,
Yes.
as well as another interesting stock, that is Kenya Commercial Bank. Let's talk about KCB, Elizabeth. KCB is almost at the tail end of the acquisition of National Bank of Kenya. Some say this will give KCB some interesting leverage.
Yes, definitely. We are seeing a very interesting moment in the banking sector with the merger, there's a KCB acquisition. So it's a moment, I would say, where we are looking at more consolidations, even in the near future.
Okay.
So what this means for KCB, they're looking for more growth frontiers. And what the acquisition to KCB will mean is that in terms of revenue, synergy, and cost synergy, the market share, definitely looking at also the deposit, on the deposit side, definitely that will increase. And that means even for the balance sheet, we'll definitely see growth on that.
Of course, it's not all rosy, Elizabeth,
Yes,
because there are some toxic loans that KCB will also be inheriting from National Bank, which has been struggling with liquidity issues.
Yes.
Yeah.
So that is one of the potential risks that we are foreseeing, because KCB is coming at a place where the NPLs have really been stable, be at 6.9%, and looking at where NBK is, definitely it will have a drag on the overall group. The other key element we're seeing is the cost to income. KCB has tried to maintain their cost to income ratio at lower levels of 46%. But look at NBK, it's at levels of 92%. So that will mean that after the acquisition, that the cost to income ratio for the overall group will come at higher levels of even say 55.
Okay.
Yes, so those are the major key potential risks that we're seeing. But overall, once the acquisition is done, we'll definitely see synergies coming on board.
All right, and finally, around this acquisition, of course, KCB is looking towards sort of consolidating itself in terms of the current framework it has. And one of the biggest items that is on KCB's watch list is fintech. And this touches on mobile lending, which has been a very interesting growth curve for quite a number of banks that have been able to tap into technology. What does this mean for them, especially from a technology standpoint?
The focus on growing the fintech is quite amazing, because we are looking at a space where the margins are shrinking. So the top line isn't growing at a faster rate because of definitely the rate cap. So now looking at this space of fintech means more fees, more commissions. The more you lend, the more your book is growing. So the focus on NFI, that is the non-funded income, is the key frontier growth for any bank. And as KCB, we've seen them making those strides, and definitely we expect to see them looking to do much more of that. So because they expect the contribution to be higher than where the current level is at.
Liz, let's shift gears a bit now. Let's look at some of the other stocks in the market today. We are seeing, we've moved from the top movers. Let's take a look at some of the losers. I'm seeing one of the stocks we have is Home Africa. Home Africa has been really in the red in terms of looking at how it has positioned itself in the market. What could be the problem within the housing sector?
Well, the housing sector has been struggling in the past years, and we don't expect to see a reprieve in the coming years. So there's also that slowdown. There's a saturation point where now investors now are a bit worried of the price. So that's why you've seen in the last few weeks there's that sell-off, and that's why the price has been declining with time. Yeah. So just say maybe it's just a sell-off, just avoiding this risk that is definitely there.
All right.
Yes.
And something that everyone would want to know that has happened this week is on Safaricom. Safaricom has had an interesting twist in their fortunes. This week we've seen a consumer actually suing the company for breach of privacy.
Yes.
And we are looking at some very interesting numbers in the trillions, if I may say so.
Well, that has been, I would say, interesting turnout because Safaricom being the biggest mover in the market, with a market rate of over 40%, we definitely didn't expect that. But what we've seen is a different reaction from investors because the price has even been increasing in terms of percentage gain. But when I look at the lawsuit, maybe I wouldn't go in depth because there's no available data on it. I would look at a situation where the court will definitely look at the breach. Because they'll definitely maybe face some fines, but not the exact amount that is being stated in all over the 1.5 trillion, because that definitely would mean the company is no more. So I would imagine a situation where the court would assess the damage caused and come up with a reasonable fine.
All
and
right.
That's something that we've also been seeing in other companies, even abroad.
And of course, that aside, Liz, Safaricom has also had a number of innovations that have been announced of late. We've seen the reverse call. We're seeing they're doing an innovation around fraud that is expected to see a new twist in the market. From a market fundamental standpoint, how stable is the Safaricom stock right now? I
would say it's stable. It's actually a very good entry position at current levels of 27.55. We've seen them coming up to consolidate first the financial service sector, which is M-Pesa. We've seen the innovations that they're driving towards that sector, one of it being the recent Fuliza introduction.
Sure.
The second one was the M-Pesa Global, which was also launched. So on the financial service, I would say it's very stable, and the prospects are even higher with the recent announcement that they want to have the whole M-Pesa rights, meaning they can now expand into other regions in African markets. So that is one. The other aspect is now what they're trying also to do on the voice. The reverse call, we cannot really maybe say the numbers that might bring, but it will definitely now support their market share in terms of voice. But we can note that over the past years, we've seen voice contribution declining. Also the same with SMS, because there's that shift now to other avenues like WhatsApp. So on the voice and SMS, they're more trying to defend the market share.
Okay.
But now the other positive aspect is on the data side. The data side is also amazing, looking at the fixed service data and also the mobile data. So those are the key areas that we're seeing more growth from Safaricom.
Interesting. Very solid insights there. Many thanks, Liz.
Thank you.
And happy belated birthday.
Thank you very much.
All right. Well, time for us to take a look at Markets 101 for this week. So let's take a look at this week's question on the street. Actually, our question today is on our social media platform, where one of our viewers is asking, how will the trade tiff between China and the US affect Kenyan markets?
Thank you for the question. So I would look at it in different ways, but just going direct to the question, how these affect Kenyan market is foreign investors have a way of reacting to what's happening on the global side. So you might find them buying more, shifting more of their money to other asset classes like fixed income, that is the bonds, and also a shift to gold. So then that would mean that there's less money coming on to the equities market. And looking at NSE market is mostly driven by foreign investors' activities, and this definitely would mean that lower activity from also foreign investors, and also the locals' participation is not that much. Definitely it would mean that the market would slide a bit. Thank you.
Well, thank you so much. Of course, always straight and to the point. Time for us to go down memory lane and take a look at our historical fact for this week. Well, that's where we bring it to a close in this week's episode of The Trading Bell. Remember, you can always engage with us on our social media platforms appearing at the bottom of your screen, and you can also follow us on Facebook and Twitter. Well, it is bye-bye from us, and that's why we have to close the markets and go and enjoy the weekend as you enjoy yours too. Liz, it's time for us to leave.
Yes, thank
After you.
Thank you.